Today, I'm going to do something different. I'm going to show you a strategy called the open range reversal. Clean, simple, and insanely consistent when you know how to use it. And I'll tell you how to backtest it yourself before you trade it with real money. Free, no coding required, no paid tools. Just a reliable process that tells you whether there's a real edge or not. Let's get straight to it. First thing first, open TradingView. If you don't have it yet, I'll leave a link in my description. Step 1 is drawing your levels, and these levels are the backbone of the entire strategy. Without them, nothing else works. There are 4 of them, and they come in 2 pairs. The first pair is the range high and range low. These are the highest and lowest price points from the previous trading day. Pull up your asset on a 15-minute chart, scroll back to yesterday's candles, and drop a horizontal line on the top and one on the bottom. Done. The second pair is the swing high and swing low. In plain terms, these are the next significant price levels outside the range. So above your range high, scroll left until you find the next area where price hit a higher point. That's your swing high. Below your range low, scroll left until you find the next area where price dropped lower. That's your swing low. You now have 4 range lines, 2 at the top, 2 at the bottom. Here's the rule that makes the whole thing work, and this is important. You only buy or sell when price is at one of those lines. Anywhere else, leave it alone. Have a full conversation with your wall. Text your ex, apologize, get rejected again. Learn the ukulele. Anything but touch that instrument. The upper 2 range lines are your sell zone. That's where sellers live. Every time the market has pushed up into that area, it's been hammered back down. Until those sellers get absorbed, price won't go higher. The lower 2 range lines are your buy zone. That's where buyers are camped. Every time price drops into that range, it finds support and gets bought back up. So the trade direction is simple. You sell at the top pair, you buy at the bottom pair. Now here's where it gets interesting. Let me show you exactly how this plays out at the open. For the first 15 minutes of the trading day, the market is doing its thing. It's testing both sides, feeling out the sellers above and the buyers below. You don't know yet which direction it's going to pick, and that's fine. You don't have to know. You just wait. What happens next, in most cases, is the market makes a decision. Either the range low gets broken and price immediately drops toward the swing low, or the range high gets cracked and price shoots up toward the swing high. This happens almost every single day. That's where the open range reversal framework comes in, and it uses exactly 3 15-minute candles. Candle 1 is the opening range candle. It's the first to move of the day, and it tells you where the market is heading. If that first candle drives all the way into the buy zone at the bottom, you're looking at a potential long. If it pushes into the sell zone at the top, you're looking at a short. The candle itself is just the opening shot. You don't enter here. Candle 2 is the pivot candle. This is the most important candle in the entire framework. After that first big move, what does candle 2 do? If the market is intending to move up from the buy zone, the pivot candle is going to be green. It's the market pausing, holding the level, and giving you a signal that the buyers are still in control. If it's a sell setup from the top, you're looking for a red pivot candle holding in the sell zone. The pivot candle validates the first candle and tells you what the third one means. Candle 3 is your entry, and in most cases, this lands right around the 45-minute mark of the trading day. The rule is simple. One candle has to go over the other. When price crosses above the high of the pivot candle, that is your buy entry. When price drops below the low of the pivot candle on a sell, that's your short entry. The moment price crosses that level, you're in. Now, stop loss. This one's non-negotiable. Your stop goes directly below the buy zone on a long and directly above the sell zone on short. Think about it this way. Those buyers or sellers in those zones have been active for at least 30 minutes by the time you enter. The level has been tested over and over again. Your stop sits right behind that muscle. If the zone holds, you're protected. If it breaks, you get out clean. It's a guardian angel, not a gamble. Target. The open range reversal is a range strategy. You bought at the bottom, you're going to the top. You sold at the top, you're going to the bottom. The target is the opposing pair of range lines. If you entered long near the swing low, you're targeting the range high or swing high. If you sold at the range high, you're targeting the range low. That's it. No overthinking. Let the range do the work. Now let me show you how this works across 3 different markets. But first, thank you to this incredible community. The most heartfelt comments will get a special reward. Your support is what keeps this channel alive. This week's winner is this comment right here. Please reach out to my email to claim your free month of Flux Charts. Now, if you haven't heard about Flux Charts yet, this is the platform I use every single day for my trades. It completely changed how I trade. Flux can run screeners on up to 15 tickers and timeframes at once, so instead of flipping through charts, it tells me exactly where my setups are happening. They have backtesting tools to build custom strategies and test them against years of market data in seconds, so you know if a strategy works before risking any money. Here's the best part, 90% of their indicators are completely free. Plus, you can use Flux Charts even with the free version of TradingView, which is huge because you can use multiple indicators simultaneously, avoiding TradingView's 2 indicator limit. They also host daily live trading classes teaching strategies, risk management, and trading mindset. Can't join live? They have a full library of recordings. Click the link in my description and use this code to discover the fantastic promotion I got for our community. Alright, let's get back to the video. Starting with crypto. Day 1. Range lines drawn, 4 levels, nothing else on the chart. Opening candle pushes straight into the sell zone at the top. Pivot candle forms red, holding in the zone. Candle 3 breaks below the pivot candle low. We're short. Stop above the sell zone, target the lower range lines. Price drops cleanly through the middle of the range and hits the target. First session, clear win. Day 2. Opening candle drives into the buy zone at the bottom. Pivot candle green. Long entry on candle 3. Price moves up a few candles, stalls, then reverses and hits the stop. 1 loss, controlled exit. The level didn't hold. It happens. Day 3. Opening candle back into the sell zone. Pivot candle red. Short entry. Price grinds lower over several candles. Takes its time, but eventually tags the lower range lines. Target reached late in the session. 2 wins, 1 loss across 3 days. Now, futures. Day 1. Opening candle into the buy zone, all the way to the swing low. Pivot candle green, long entry. Price moves up slowly, wicks the range low from below a couple of times, comes back up, keeps climbing. It takes its time, but it gets there. Target hit at the range high. Patient trade, good outcome. Day 2. Opening candle into the sell zone. Pivot candle red, short entry. Stop above the zone. Price drops fast, no waiting around, straight to the lower range lines in 3 candles. That's the one that feels easy. Enjoy it when it happens. Day 3. Opening candle into the buy zone. Pivot candle green. Entry triggers. And then the market just sits there. Wicks the low again and again. Your stop is holding because it sits below the zone, not at the line itself. 5 candles go by. 6. Then price finally catches a bid and rallies all the way to the target late in the session. This is the trade most people don't survive because they exit early. The level was holding the whole time. Nothing was broken. 3 sessions, 3 wins. And now, forex. Day 1. Opening candle into the buy zone. Pivot candle green. Long entry on candle 3. Stop hit almost immediately. Price spikes through the zone, takes out the stop, then reverses back down without you. Frustrating. You sized correctly, the loss is small, you move on. Day 2. Opening candle into the sell zone. Pivot candle red, holding in the zone. Short entry. Price drops immediately, no hesitation. Straight run to the lower range lines. Target hit fast. Clean trade, no drama. Day 3. Opening candle back into the buy zone. 3 candle setup. Long entry. Price moves up through the middle of the range and reaches the sell zone. Target hit. 2 wins, 1 loss across 3 sessions. 3 markets, 9 sessions, 7 wins and 2 losses. And the losses were both controlled because the stops were placed correctly from the start. That's what this framework gives you. Not a system that wins every time. A system where when it works, it goes all the way to the target, and when it doesn't, the damage is limited. That's the math that actually works in trading. Now, I have to be honest with you about something before we move on. What you just watched is not a backtest, it's a demonstration. It shows you how the setup looks and how the logic plays out. But it is not proof that this strategy works, and anyone who tells you otherwise is selling you something. You've seen these videos before. A trader pulls up a chart, walks you through a few beautiful examples, everything lines up perfectly, and by the end, you're ready to fund an account. I get it, I've been there. But here's what those videos never show you. The 3 weeks in a row where the setup stopped working. The market condition that quietly killed the edge. The parameter that looked great on 10 trades and collapsed on the next 50. The only way to actually know if a strategy is worth your money is to backtest it yourself, not watch someone else do it, not trust a win rate someone posted in a YouTube thumbnail. Do it yourself on your own data with your own eyes. And here's the thing, most traders don't. Some think it's too complicated. Some don't know where to start, and some do it, think they're doing it right, and make critical mistakes without even realizing it. They end up throwing out strategies that actually work, or worse, putting real money on strategies that look great on paper and fail in live conditions. So I put together a complete free guide on how to backtest properly. No coding, no paid tools, no complicated setup. Just a clear, reliable process that tells you whether a strategy has a real edge before you risk a single dollar. It's completely free. Link is down in the description. All I ask in return is that you take 2 seconds out of your day and like this video, and drop a comment below telling me what you do for a living. I read every single one. That's all for this video. Remember to subscribe and activate the notification bell. See you guys next time.